I personally think that the gold price is set to move 10%. Like I think it's going to, 2150, maybe up to 2200 in the next 90 days. When silver goes, there's nothing to slow it down, right? It just goes like totally bananas. I mean, like one day it's going to go, and it's like, Charlotte, it's going to make your head go up and spin all the way around. Your ponytail is going to go flying in the air. That's how crazy it is. That's how crazy silver gets. But the problem is the wind. It's extremely difficult. Because to keep those bets is expensive.
Gold prices have rallied nearly 8% in the past week from its recent 7-month lows. Gold, often used as a safe store of value during political and financial uncertainty, has risen 2.2% this week. In E.B. Tucker's remarks, there is a substantial upcoming movement in the price of gold, expecting it to surge by around 10% in the near term. He envisions gold prices reaching between $2,150 and $2,200 within 90 days. Gold prices usually decrease when interest rates rise and increase when interest rates go down. Higher interest rates raise the opportunity cost of holding gold, which is priced in dollars and does not yield any interest. However, Tucker points out that gold has exhibited resilience despite increasing interest rates, remaining relatively stable. This is especially notable because in recent years, interest rates have risen from near 0 to 5.5%, and yet gold prices have held steady. For instance, over the last 20 years, annual inflation has averaged 3% in the UK. According to the Office for National Statistics, over the same period, the price of gold has increased by an average of 9% per year, according to the World Gold Council. According to the Bank of England, the average base rate, a proxy for the interest rate on savings, was 3% over this period. While Tucker is optimistic about gold, he also emphasizes that silver is volatile and unpredictable. Silver price climbed from around 2-day lows of $22.60. It targeted the 200-day moving average on Thursday after comments from the U.S. Federal Reserve Fed Chair Jerome Powell impacted the odds for another rate hike in the futures market. Tucker sees that silver has the potential to reach $100 per ounce in the future, but silver's surges in the futures market can be exceedingly challenging. It can happen suddenly and swiftly, making it difficult for traders to predict. We will now present clips from E.B. Tucker's interview with Investing News. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
It is maybe not the most important, but it is still, I mean, obviously we don't want to buy gold and then see it knocked in half, but I don't think we will. I personally think, I mean, right now, let's see, this moment, 1924, we had a big day on Friday. I personally think that the gold price is set to move 10%. Like I think it's going to, 2150, maybe up to 2200 in the next 90 days. And I think that because what we saw recently was we saw all the indicators that show the same move that we saw in 2018, early 16. We saw this like huge dip down that didn't make any sense on high volume, and then an immediate back to where it started. And usually when we see that, we know that the downside is over. And it's really tough for gold with high interest rates. A couple of years ago, you would have said, what happens when interest rates go to 5? You'd be like, gold does not do it. It doesn't move. You would have definitely said that, right? Because that historically, the correlation is that the gold price moves opposite of interest rates. But what are we seeing? Gold is held in there pretty well. I mean, 1925, okay, so we're flat for 3 years when interest rates went from 0 to 5.5. Wow. I mean, that's pretty crazy. And in every other currency except the dollar, it's at an all-time high. So, I mean, look for 10%. Let's look for 10% by the spring. How about that? And then you can have me on and throw tomatoes if I'm wrong. The problem with silver is 15 years, same place. Someday, it's going to go up to like $100. But who knows what day it is? And so it's impossible, because if you try to if you have a futures trade on when silver goes bananas, you're going to make so much money that you'll have a yacht in Cole Harbor that's called like the silver dollar or something, and everybody will point at it and say you're the smartest person alive. But it could be in a month, it could be in a year, it could be in 5 years, it could be in 10 years. Nobody knows. And it goes so fast that nobody trusts it. So I cheer for silver. from the sidelines. I want silver to win. I know that it's going to go. Somebody is going to catch it when it goes and make a life-changing fortune, but it's not going to be me. I know this because like the silver went to 30 in 2021. So I was like heavy in I had like big futures and options and I had this big trade going. And it was like, it started to go, and I added to the trade and it stopped going. I mean, it's just like, it's too difficult. It's $22. I mean, like $22.91. Can you believe it? I mean, honestly, an ounce of silver, $22. I mean, it's like, I probably have one here. It's like, a couple of these on the desk here just for fun. But I mean, $22. You pull that thing out of the ground, melt it, stamp it, $22. I mean, seriously, it's like 1/90th, maybe 1/85th the price of gold or something. And it could go, I'm telling you, like the market for silver. Okay, so in gold right now, the futures market in gold determines the price. There's about $120 to $125 billion worth of gold futures trading right now. So silver, there's like 10, maybe 12. So it's like 1/10 of the liquidity. And what that means is that when silver goes, there's nothing to slow it down, right? It just goes like totally bananas. I mean,
the Ukraine conflict began in February 2022 when Russian forces entered Belarus, Russia, and Crimea, following 8 years of fighting in eastern Ukraine. These conflicts and the Israel-Palestine war have raised gold prices due to increased investment as a financial safe haven. Geopolitical concerns, such as clashes between Israel and Hamas, led to a 1.6% increase in gold prices within a week. Despite the complexity, Tucker suggests focusing on short equities, investing in energy and precious metals, and anticipating a rise in long-term interest rates. Tucker highlights China's growing geopolitical influence in the Middle East. China's involvement in the Middle East has reshaped the region's landscape, expanding beyond traditional energy sources to encompass economic, geopolitical, and strategic considerations. The country's non-interventionist approach appeals to Middle Eastern states, which view their growing ties with Beijing as a means of diversification. However, China's increasing engagement threatens U.S. regional interests and its relationships with traditional allies. These developments could have significant global economic implications. Let's get back to the interview.
What happened to the war in Ukraine? I mean, that's, I'm always, saying the thing that's interesting about the war in Ukraine is that I've been to Ukraine maybe 6 times. It really bothers me when people call it the Ukraine, because it's not actually the Ukraine, just like it's not, the France. But anyway, I would walk around and I would see all these like signs about, killing Putin or something and supporting. And this guy that I'm friends with was telling me he kept sending $20 a month for them to buy Javelin rockets. So it was crazy. And I asked people, can you find it on a map? Well, I don't need to find it on a map because I have the flag in my yard and I support whatever. Okay, now it's all done. There's zero news about Ukraine. The whole thing is still happening. Zero news. All Israeli conflict news. Okay, both of these things, like you say, are very serious. The reason why they're serious is because there's a lot of bloodshed. And it's really, it's terrible when you have these conflicts, because the problem all the time is that the bloodshed is never experienced by the people that really are at the heart of the conflict. There's always unintentional bloodshed. And that means people are dying that have no business dying. It's awful when this is happening. And so we sit back here as investors and we say, we have to be responsible for the things we can control, right? And it's like, unfortunately, we have to maneuver based on our life, because we didn't choose this situation, and we can't really do a lot to affect this situation in the short term. But we have to look at this and we have to say, okay, you have this flare up. It's not going to flare down quickly because there's a lot of dynamic parts of this situation going on. I don't know if people know this, but the Chinese have reached a deal with Saudi where they have a Confucian Studies department in all the colleges. They have multiple nonstop daily flights from Saudi to China. They have constant dialogue and agreement, so many different things, and China's acting like the broker of peace. Now, what does that have to do with Israel? Well, Saudi was just about normalizing relations with different parts of the Middle East, including Israel, also with Iran, which they don't necessarily agree on everything, is very, very different cultures. And you see that there was a call, with Saudi and Iran leadership. There's a call with Saudi and China leadership. All this is tied together. And then you have the U.S. flaring up the situation, everyone's choosing sides. Everyone is tense. Everyone is ready to fight. And they will be, fighting to one degree or another. And you sit back as an equity investor all the way in North America and you say, the only thing you got to focus on here, short equities generally, long energy, long precious metals, and short term, you can be long rates. Long term, interest rates are going up. So you have a lot of moving parts here. And that's all separate from the fact that there's unnecessary bloodshed by people that don't deserve it. It's very complicated.
Federal Reserve officials are delaying interest rate hikes for a few months due to mixed economic signals, including strong data, progress in managing high inflation, and changes in borrowing costs. This pause reflects a shift in perception about gold's value during economic uncertainty. What are your thoughts on the future price movements of gold, silver? Share your observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.